Hello all, welcome back to my YouTube channel The Market Hub. If you are invested in IT sector and the companies and confused whether to buy or sell or hold, then this video is for you guys. Today in this video I'll be discussing about what's happening in IT sector currently and what you guys need to do being an investor and what are the other sector you guys can take a look at. Let's discuss everything one by one. So please make sure you guys watch that video till the end. If in case you like it, please share it with your friends and don't forget to subscribe the channel and click the bell icon. So without delay, let's start the video. So I'll be sharing my screener. Let's search for Nifty IT. Here we go. So this is the Nifty IT. Hold on. Before getting into this, let us understand the business model of IT in India. So currently, all the IT companies in India, so these are the top IT companies: TCS, Infosys, Wipro, HCL, Tech Mahindra, LTI Mindtree, everything. These companies provide a service to foreign clients such as Europe, US, Southeast, Middle East, everything as a service, and then they will get a money in terms of dollars and euros, and that will be their net profit. So that is a high level business model of these Indian companies, especially IT companies. So since currently there is a era of AI, as you all know, we have seen ChatGPT, Gemini, Cloud AI, which is growing exponentially and taking out all the jobs massively. So if I just show you guys the recent layoffs, you can see, right, there is huge layoff that is happening across all the companies. In Meta, there are 8,000 workers has been laid off, which is around 10% of their staff. In Oracle, even we have seen in India, there is layoff that is keep happening in Oracle, Amazon, and then BlackRock, and then Atlassian, etc., etc. Even in TCS, Infosys, Wipro, everywhere we have seen their layoff. But hold on, now you guys will get a question. If the layoff is happening, then it will be good for IT companies, right? They will get a work done with less number of labors. So basically, with this AI, they can reduce the number of employees, and whatever the work that was done from 10 employees previously, they can do it with 4 to 5 employees, which will increase their revenue, right? But that will not happen. What, according to you guys, think? Let me go back to this IT index and let me open TCS. So currently in TCS, so if you guys see the results, uh, where it is, see, 2026, I think this is a profit and loss. Let me go back to quarterly result. Yeah, if you see the net profit of TCS, which is 13,784 crores in March 2026. If you see year on year, in March 2025, what was the profit? It was 12,293. So there is only 1,000 crore increase in the net profit year on year, which is very low for the big tech giant like TCS, right? If you see the market cap, it is sitting at 8 lakh crore of market cap. Even though there is so much of layoff in IT industry, we have seen there is less increase in net profit. Why this is happening? This is basically happening because the product based companies are stopped giving, the services to Indian IT companies because of AI. AI itself can do more work than the service companies they need. So that's the reason why the market is reacting very negatively from last 1.5 year. I think even though if we see 5 year data for TCS, so whoever started investing April 2021, they can see negative return for 5 years. I think for 1 year, if you look at the overall IT index level, it is sitting at minus 17%. This is overall. This is overall as in it includes all the top tech giants, Infosys, Wipro, TCS. If you look at individual companies, see this is the 1 year return of TCS, which is minus 30%. Now you guys might think this data we all know. Tell me what being an investor we need to do, right? So for that, the answer is very simple and straightforward. Before telling you the answer, I just wanted to show you one more thing, which is the result. It's not only for TCS, I wanted to show you for other companies as well. So this is what the current situation of IT and all the investors. I think 7 lakh crore Indian investor money wiped out from all these tech giants. So that's what the data is showing. But what you guys need to do being an investor, see guys, currently we are seeing a huge, massive sell off in IT by all the investors. That is because we are not aware of future. It is like fully uncertain. Nobody knows what will happen to these companies because these companies, Infosys, TCS, Wipro, these companies don't have any product business model. They only provide services to the foreign clients, and that's how they will get a money. So currently, there is no way these companies will survive with the service-based model in this AI, era. So from that, what you guys can do being an investor is, see, if you just see the weightage, even though the Nifty was dragged down by this IT index itself, the first one is banking, which has high weightage. Apart from this bank, we have information technology, which is IT has 10% weightage in the Nifty 50 index. So for now, if you already invested, don't average it further because we never know what will happen, right? In future, if there is some good news and good patterns that comes for the IT industry, and if they stand out with that business model, then you guys can think of averaging it. But for now, if you already invested, don't average it further. There might be further breakdown and it might go still more down. We never know. But currently, it's fully undervalued based on the valuation perspective. See, I think this went, there is no point at all. This is at 20 PE. Overall 10-year average also, if we see, this was the peak drop down. This was happened in 2008. But after that, even in COVID also, it went till 23. But currently, if you see, this is at 20, which is like huge sell off. The median PE is 25 and current PE is 20. So looking at the valuation, this is deeply undervalued, but only issue is we don't know the future. We don't know what's going to happen with these companies, how this business model going to survive, whether if something good comes in AI space and so that these companies can improve their business model, we never know. So only way we can do is by looking at this percentage of allocation in our Nifty 50, which is top 50 companies of India. What you guys can do is just stay quiet, stay with the patience, don't sell the loss, don't book the loss, stay with whatever the amount you have invested, don't average it further. And if you want to invest, there are a lot of other sectors. I just wanted to talk about that as well. See, we, due to this, the GST reforms and then tax rate cuts, there is a lot of, the profit, the FMCG sector and then the pharma sector going to make, even the textile industry, due to all this negotiation deals done between US, India and then Europe region. So please have a look into those sectors. One is FMCG and then pharma. Due to this war, we can see some increase in defense sector as well. So please have a look at those sector primarily, but don't average down the IT industry for now. Nifty defense, right? I'll just show you defense. I think we can't see defense. Nifty FMCG. I think due to this high, we can see there is an increase in FMCG companies in last 1 year. Due to the war, it fell down, but here we are seeing recovery. Just explore and diversify your portfolio, guys. Don't keep averaging down this IT index till the time you get some good news in IT sectors. For now, everything is uncertain in the IT industry. That's what I can say and conclude with the video with that. And if you guys are already invested, just stay with the patience. With that, I will conclude this video. If you guys have any question, please comment it down and don't forget to subscribe the channel and please share your views on this video as well. With that, I will take a sign off. Thank you all. See you all in the next one.